Hey everybody, how you doing? Happy Tuesday. I'm here with my friend Special Ed Milewski, as per usual. And yeah, what's happening? Cannabis market still looks like shit.
Although a little bit higher again today. I saw weeds up 15, 20.
I haven't actually looked at it.
But the moves aren't like what they used to be, you know?
That's for sure.
You can't stir the pot and get the paint sprayed all over the wall as easy, you know?
No, well, that's because...
Hey, interest rates back to 186 on the 10-year.
186?
Yeah, I'll put up a chart. I want to put up a chart because there's a level there, right around here, where if it breaks that, it could mean higher rates. And I don't know what higher rates is going to mean, but it's not going to be good for real estate. That's one thing for sure.
No, or for people who borrow.
And maybe that's the last hurrah. Maybe that's the last... Here, so let me put up I'll put up a 3-month.
You put up the 3-month. I'm going to look at...
So here we go. We're at 187. And there... Just 1 second here. Look at that. That's about a 180 something. That's the same number there. And it was just about there. So we're pushing against that resistance. This is 150. So we've gone from 150 2 months ago to now 187. So you think about 37 basis points on 150. That's well over 20% of an interest rates. The yields on 10-year bonds are up to over 20% from where they were in 2 months.
Jesus.
And look at this last surge. What did gold do today? Down $25. U.S. dollar stronger. The S&P's flat. Okay, that's the summary.
Wow, that's amazing, Ed. I got to hand it to you. You sent me an interesting piece of literature to read last night, wherein Zero Hedge guys...
You get it better than I get it, I can assure you, but I'm glad I sent it to you.
So.
Yeah.
Well, I thought it was interesting because in it, the author who goes by Tyler Durden, I think that's
his pen name. That's just like his...
Isn't it a bunch of people who all publish under that name?
Yeah, Tyler Durden was the movie in Fight...
Fight Club.
Yeah. But this is a very interesting... Because
this guy's inside the market, but he basically, 2 weeks ago, when we were saying the repo market, and we speculated that this was actually the big banks, the primary participants in the Treasury market were extorting the Fed into printing more cash because, and we didn't really figure out why, but now we know why, is because JP Morgan has just converted 40% of its loan book into long-dated
government securities,
thereby lowering their risk rating according to the Bank of International Settlements in the globally systemically important bank rating, which determines how much cash they got to have on hand in the event of a negative event in the global economy.
So they've improved their balance sheet dramatically.
Well, and they've taken themselves out of the harm's way in the loan business. So as the authors who constitute Tyler Durden said, which was not our point, they said it's as if JP Morgan has already priced in the next recession. And
wow, that's telling. That says it all.
Right.
So they're counting on a recession because when yield curves invert, 9 times out of 10 you have a recession.
Well, the yield book goes south when the economy is weak. The debt quality. So that's when the defaults start happening. That's when everybody gets into cock-a-doodle. Less exposure for the biggest banks dictates get out of the loan business ahead of a recession. And that's what JP Morgan has just done. That's why they're saying, we don't want cash. Give us government securities. So there's... we're not playing that game at the repo window anymore. You want cash in the repo window, create your own cash, but we're going to take the securities and we're keeping, they're keeping the securities. That's what they want. The cash they're going to use for other things. They don't want it they don't want to be part of the repo bullshit.
So you're saying they're being, and so what's going to stop the rest of the banks doing the same thing?
Well, some banks are not as flexible in their structure to be able to do what JP Morgan has done, for one thing. Secondly, Bank of America, I think it was mentioned in that Zero Hedge article, makes the case that it's actually in a better position by virtue of its lower GSIB rating to remain in the loan business because they don't have to keep so much cash around in the event of default. So they're still able to grow that business. JP Morgan had more or less maxed out on what it could do and still be efficient in its return on equity. Arguably. At least that was the argument made by these guys. But they concur with our thesis 2 weeks ago that the action in the repo market is actually quantitative easing forced on the Fed by the likes of JP Morgan and others. So that's pretty cool. That's what that means is the foxes. The foxes not only are watching the chickens, the foxes are telling the chickens what to do, and the chickens, like the Fed doesn't decide what to do. The JP Morgan decides what to do and lets the Fed know. And if the Fed doesn't play ball, JP Morgan just sticks it to them good and hard, a la repo market, and the Fed does all it can do, which is what JP Morgan told it to do in the first place. Anyways, these are interesting things. Maybe they don't mean anything to you. Maybe you think we're smoking crack, but I can assure you these things are going to come to be extremely poignant for one and all. So like, what could happen? Everybody's probably thinking, well, what's the worst that could happen? We're so stable up here in Canada. Well, okay, let's picture a spike in interest rates after the zeroing and sub-zeroing of interest rates ultimately fails and forces the return of reality as these banks start to fail. Banks with cash are going to need money. They're going to decide it's going to be like, Fed, doesn't matter what number you put on the interest rate, we want 11% for our money, and that's the only money that's out there because nobody's going to take the Fed's dollars anymore.
Yeah.
I mean, this is the thing. It's like if you have a mortgage and you think that you're safe because your interest rate is stable.
Does the phrase "caught between a rock and a hard spot" mean?
Well, that's just it. That's why
it looks like more and more. I don't see this. This is going. They're kicking the can down the road, but eventually the chickens have got to come home to roost.
Well, exactly. So as an individual, you have two choices. You either live hand to mouth by the seat of your pants out there in the wilderness, waiting for your mortgage to cave in or the payments to go so high that you lose your house and all the equity in it, or you change your strategy, eliminate debt from your life, pay off that mortgage, starve if you have to, but pay off all your debt, own your house, and at least then you have a measure of independence. Here's what I realize. People think that money is power. Well, money is power as long as money has buying power. But if money loses buying power, which it's done multiple times during times of debasement and inflation, Zimbabwe, Weimar Germany, etc., then money is not power. What is power then is independence. If you're able to actually raise your own food and generate your own electricity on a piece of property that you own outright, you are independent of the machinations and the fluctuations in the financial universe, and you're really insulated against them because it doesn't matter. You don't have to sell anything. You own your property. You're not making any payments. You can sell your chickens to a neighbor. You can trade your chicken for a carrot, but you're never going to starve. You can be off the grid. Nobody can take your house. And that's actually, I think, the real essence of power. That's my theory.
Well, you know what? There's a book called The Great Reckoning, and in the book, at the end of the book, the summary is like this: don't owe money, live below your means, and watch the insanity unfold from the sidelines. Like, do you want to be in the arena, the lion? What do they used to call it in the Roman Colosseum?
The Colosseum.
Yeah, you want to be.
What do they call it, the Roman Colosseum?
Yeah, right.
You answered your own question there.
Okay. So you want to be in the center ring? I don't think so.
No,
you want to be watching, hooping it up, having some cocktails, maybe picking up a young lady or something like that.
Something like that. Smoking a doobie.
Yeah. Did they have doobies back in Rome?
Yeah, they did actually. They did, but that's neither here nor there.
Okay.
That's a major. That's what we call a major digression.
It was enlightening. So now we can see that there's things going on.
Right.
And here it is, they got the Fed funds rate at $1.75. They want to keep it between 150, 175. Here you got the 10-year rate at 187. So is that an attempt to make the yield curve more normalized?
Well, I think that the Fed is able to influence long-term rates. And when I say long-term rates, I mean the 30-year bond. They're able to influence those rates, and they're able to force big institutions to play the long-dated bond game.
Right.
Because it's in their interest to do so. They can show a balance sheet with these assets way out here in the future where the risk of default is much lower, even though they consider the U.S. bond a zero-risk instrument. To me, that's just insanity. I think a U.S. bond is probably fraught with risk. It's just in what timeline? That's really the only question here. Most people only think in 5 to 10 year increments, but what timeline? What timeline does U.S. debt actually implode? Does China actually blow out its bonds, start a run on the bank? The next thing that the United States is going to have to roll out the artillery just to maintain its interests, because its money will be no good, and there will be there will be a new currency launch, the special drawing right by a conglomerate of G7 nations, just in time.
Somebody will probably invent a cryptocurrency.
I think that is the baker's cryptocurrency. They keep throwing cryptocurrency guys in jail. You read about the guy in Vancouver. He owes $16 million. The Einstein exchange. They can't find him. They can't find the guy.
They put him in jail?
They will if they can find him.
If they can find him.
But the BCSC is looking for him. He was tried in absentia essentially yesterday, and they're trying to find him. And it's hilarious. You go to the Einstein Exchange Facebook page, and there's all the customers screaming, running riot. Where's our fucking money, you bastard?
Now, how much did he get?
Well, it's unclear, but they say that he owes his customers $16 million. 16.
Ah, that's enough.
Yeah, I don't think that's FDIC insured, is it? Anyway, so the cannabis market notwithstanding, the problem we have in Canada right now is everybody's myopically focused on the cannabis industry and saying, oh, woe is me, the cannabis industry this, the cannabis industry that. What's happening in the cannabis industry is happening in a lot of industries that are not fueled by large cap investors. So to the extent that a share of Apple and a share of Google has become an extension of a US bond is really just a matter of perception, because all the money that's printed in the United States as a result of quantitative easing ends up in the large caps, in the S&P companies. And so if you're not part of that crowd, you're seeing weakness in your market right across the entire capital market spectrum. I mean, mining, energy, esports, everything is looking like it's been sort of shit kicked.
And if you think about it, like people that played, there were some people, and we know a lot of our friends.
Where were some people?
They're all over the place. You just step outside, you'll see them.
They're all over the place.
That really went into the space in a big way. Like broker, for instance, half their books in marijuana, right?
Yeah.
Well, now what are you going to do? You have a choice. If you get some, and you look at your Chiron. You see Chiron today?
No, I haven't. What's happening?
87 cents.
Really? Is that up or down? I'm thinking that's down by your response.
Well, I don't think I've seen an 8 handle on that stock.
No, eh?
Well, it was 4.25.
No.
8 months ago, 9 months ago.
Really? See, I almost can't remember that.
Well,
anyways,
now let's say you leave the company and you got a bunch of stock. Do you sit on your stock waiting for it to come back, or do you say, whatever?
Oh, look at this. It's actually in the news. JP Morgan pours $130 billion of excess cash into bonds in major shift. This is hilarious. Shrunk its loan portfolio by 4% or $40 billion a year. Did I say 40%? Yes, that makes me a crackhead. My apologies.
You said their rate was 4%. Their SIB rate.
Their GSIB rate is 4%.
Yeah. Now, but that's going to change now, right?
Well, the next review is in 2021. The review is every 3 years. So I think that they're positioning for that. But so according to the news, now this is the mainstream American financial media, which is subject to bias, shall we say. Top Morgan Stanley fund manager sees stocks rallying another 5% before 2020, led by cheap value stocks. Now this is interesting. A top Morgan Stanley fund manager, and Morgan Stanley, the Morgan in Morgan Stanley is the same Morgan in JP Morgan, which is something a lot of people sort of miss. Do you know how JP Morgan and Morgan Stanley ended up splitting?
They were the same company at one point,
Right.
and then they did something like that. But I don't know.
They had to split up.
Because they were too big?
Oh no, the legislation changed. The rules changed as a result of the, what crisis was it? Here's a test. Email your response. What crisis was it in the 20th century that caused JP Morgan's banking enterprise and trading enterprise to divide into JP Morgan and Morgan Stanley? If you answer that correctly, we will give you an all expenses paid trip.
Sarbanes-Oxley.
You're not allowed to participate.
I don't know. That's a wild guess.
And plus, you got to email me the answer.
Was that
So
right?
you would, no.
Okay.
It's in the 20th century. We're in the 21st century now, Ed.
We are?
Well, I am. I don't know about you.
Sometimes I wonder where I am.
Anyways, if you can name that, if you can answer that accurately, you get an all expense paid all expense
To
paid
Mercado,
trip for
to the
two to Mercado, where we will buy you each a
Wait a
glass of
minute.
wine.
Oh, provided that you show up between the hours of 5 and 7. 4 and 7.
4 and 7.
4 and 7. If you're in there between 4 and 7,
Your drink's on our tab.
The first drink's on us.
In fact, if you want to come down and argue with us or even tell us what event that was, because we don't really know, we'll still buy you a glass of wine today at 4 o'clock, won't we, Ed? The entire audience, all of YouTube.
Okay.
Does that sound good? Anyways, we have a couple of guests today. I don't know who they are. Oh, coming up on the show today, Craig Perry is going to join us from IsoEnergy. And IsoEnergy is the uranium exploration company in Alberta that is associated with, oh my God, I can't believe I just flubbed that, with another famous uranium company who I've only interviewed about 30 times, but this is old age setting in. And then Black Iron. It's a mining day here on Midas Letter. Mining Day. Nat Simpson is going to be here from Black Iron to talk about iron's 30% gain performance this year. But first, let's talk to Craig Perry from IsoEnergy. Joined now by Craig Perry. He's the CEO and president of IsoEnergy, trading on the TSX Venture under the symbol ISO. Craig, welcome back.
Thanks very much, James.
It's been like how long since we've chatted?
Well, a good while, probably a couple of years, actually.
Yeah, exactly. But you know, testimony to the value in IsoEnergy, I think, is that you continue to evolve your projects and put out great press releases. Why don't you give me? Let's start with an update of what your progress has been in the last year and what you're up to now.
Yeah, absolutely, James. So, of course, we're a spin out of NextGen Energy, and we've been exploring that eastern half of the Athabasca Basin. We acquired a property off Cameco back in May last year. We had a drill rig out there 6 weeks later, and we announced the discovery of our Hurricane deposit 2 weeks after that. So we've been very much focused on drilling that deposit out. So we've now had a couple of programs there. We did a major program back in winter last year, and we've just wrapped up our summer drill campaign, putting out some, very, very spectacular numbers, typical of those high-grade Athabasca Basin deposits. In recent times, we've put out our drill hole 1916A. We hit 7 metres at 5.4% U3O8. So we've continued to expand that deposit, and it's shaping up to be very, very good for our investors. Sure.
And now the uranium prices are starting to recover quite a bit, well, aren't they?
Yeah, look, I think you're right. Of course, last year we saw a good, strong rally in prices from about $17, $18 a pound all the way up to $29 a pound. Prices have drifted in recent times. Of course, those price rises are based on fundamental supply-side erosion. So you've seen some very dramatic cutbacks in production globally from the major producers like Kazatomprom. And of course, last year, the biggest news we've seen in recent times was the closure of that giant MacArthur River mine, Cameco's mine in Saskatchewan, not far from some of our projects. Cameco announced the closure there. That took out about 13% of global production. So that's the equivalent of all of Saudi Arabia's oil production coming off stream in an oil sense. So that's started to now take hold. We're starting to feel prices are rising off the back of that production. Of course, the big thing that happened there with the closure of that mine is that Cameco's now had to go into the market and buy a large amount of pounds to feed into their long-term contracts. So we're starting to see the effects of that happening. Cameco started buying last year, drove that price to $29 a pound. They pulled their bids from the market back in March last year for a couple of reasons. But what they've told us is that they'll be buying strongly over the next couple of months. So we expect that the uranium price is really about to gather steam here. We've been in this very low price environment with closures having happened for 2 years now. And it typically takes a couple of years before you see those sorts of things wash through the market, and we're seeing that now. So, look, we think 2020 is absolutely going to be the year for uranium. So a good time to be, refreshing your listeners and viewers on the story again, if you like.
Sure. And what's the outlook in terms of reactor construction globally?
Yeah, look, a very, very good question. And, if you sort of read the papers, you'd think that things aren't going great. But, of course, uranium and nuclear power is the only stable baseload form of zero carbon power in the world. It's clean, green power. Those key drivers of demand for all metals in recent times, particularly China, but also India and the Middle East, are constructing reactors at a rate of knots. So last year we constructed on the planet more reactors than at any other 12-month period before that. China continues to commission a new reactor every 6 to 8 weeks. So demand is growing very, very strongly, and now you're starting to see, as I say, Saudi Arabia, India, Russia are constructing 26 reactors as we speak. So that demand side is growing very, very strongly, and that's met with a very challenged supply side. So, we think that the next 2, 3, and out to 5 to 10 years, the outlook for nuclear, the outlook for uranium is truly spectacular.
Sure. Is it conceivable that Cameco could add 13% more supply by bringing the MacArthur line back online, or is there some fundamental flaw with that whole operation that's caused its permanent closure?
Yeah, good question. Look, it's obviously a fantastic project. However, we saw in March last year, Cameco put out a technical report that suggested to us that when you factor everything in, it's very clear in that technical report that they need $50 per pound uranium or thereabouts to get an 11% IRR on that project in terms of reinstating it and then doing the sustaining capital works to keep that project going, which amounts to about $1 billion over the next 5 years. Investing $1 billion to give you an IRR on a mining project of 11% at a $50 uranium price, to our mind, that's not something that's going to happen. I think that you really need to see $60 or $70 a pound uranium before that project will deliver its investors a serious return. So we think the uranium price has got to rise very, very strongly and well above those levels before you see that production come back on stream. So, we think we're protected from that production for some time. I think we're going to have a golden couple of years in uranium.
Sure. So do you think then that that your company and or that your company will see its mine put into production before MacArthur comes back online?
Yeah, look, good question. We're a little bit, we're at the earliest of stages of a discovery. As I say, we've done a couple of drill campaigns now. We're really in that resource delineation drilling phase. We'd love to think that we can advance that project as quickly as we possibly can and catch this next cycle. I do think, given the demand and supply profile, that this next phase of the uranium cycle, if you like, will be a longer lived one than the last. The last one, of course, ran from about 2006 through to 2011 and collapsed off the back of the flooding of that Fukushima plant in Japan. So that was a sort of 5 or 6 year bull market. I think the next one will be much more sustained because of this new reactor construction, and that gives us a chance of meeting that uptick in the cycle, that sustained uptick in the cycle. But as I say, we're at the earliest of stages. We remain the only junior globally as we speak with a new high-grade discovery. It's in Canada's Athabasca Basin, Saskatchewan's Athabasca Basin, of course, so it's the right jurisdiction. It gives us and our investors the best chance of catching that, the best part of that cycle.
You bet. All right, Craig, great update. Thank you very much for joining me.
Good on you, James. Thank you very much for your time.
Follow us on Twitter, Instagram, LinkedIn, and Facebook. Make sure you never miss a show by subscribing to our YouTube channel and clicking on the little notifications bell. If you're interested in getting monthly actionable investment ideas in the cannabis space to your inbox, subscribe to the newsletter at MidasLetter.com. Need a cup of sugar. Ed needs a cup of sugar over here. Anyways, yes, so uranium making a comeback.
Is it?
No. Yes, it is. It is actually. Uranium's doing quite well. It's, China's actually got a lot of reactors under construction.
Well, now they're building these smaller reactors apparently that are going to be a lot safer because they're smaller and they're mobile and all these different. They've got all this technology.
It's basically a rolling bomb.
Yeah, but look.
Have you heard about
France is almost entirely reliant on nuclear energy. Did you know that?
Yeah, I did actually. The largest nuclear power company in the world, reactor-wise, is who is it? It's not Imerys. Imerys is associated. No, forget it. I don't know. I can't remember. We can't remember. Jesus, we don't have research assistants here. We got to remember everything. I can't remember everything. Can you remember everything? Can you remember anything?
I can't.
Remember anything from last night?
Yeah, yeah, never mind. Jesus. Yeah, I remember what I ordered.
There is a new type of liquid reactor out.
Yeah?
Yeah, liquid metal cooled reactor.
Liquid metal?
Yeah, or liquid sodium reactor.
Jesus.
So basically the premise is that the reactor occurs in a coolant that is, if there was to be any malfunction of the reaction process, the meltdown would occur in something that would stop it from happening. Basically, liquid metal fast reactor is an advanced type of nuclear reactor where the primary coolant is liquid metal.
That's what they made the Terminator out of, liquid metal.
Well, that's also, it was first for nuclear submarines. Liquid metal was what the Terminator was made out of?
Yeah.
Really? I thought it was made out of antimatter.
No, liquid metal.
Liquid metal?
That's Arnold says it right on the show, right on the thing.
Really?
He says, liquid metal. He does. This is in the first one. No, the second one where they brought the advanced prototype, the guy that could change everything. And
the guy who came back to, right. There's a new Terminator. Ooh, is Arnie in it? There is a new Terminator with Arnold Schwarzenegger this year. Unbelievable. That's got to be worth the price of a bowl of popcorn. Have you been following any of these new things on Netflix?
Like what?
I don't know.
There's some interesting shows now, aren't there? Like you got to. I don't watch TV anymore because you know what? I don't want to have to watch the next week. I can't stand the thought of being.
You don't have to. Now you can download 13 episodes of a whole season and watch it all in one sitting. That's how I watched Breaking Bad. I watched 5 seasons over the course of like 10 days.
Did you like that one?
I thought it was hilarious. The first time I watched it.
It seemed a little far-fetched at the end, right?
Oh yeah, it was overacted. It was like, it was over the top.
That guy who made a name for himself.
Which guy?
The guy that played the teacher.
Yeah, Bryan Cranston.
What?
Bryan Cranston.
Okay.
But what about Aaron Paul, the guy who played the kid?
What about him?
Well, he's made BoJack Horseman.
BoJack Horseman?
You haven't seen BoJack Horseman?
No.
Oh. Yeah, put up a quick image of BoJack Horseman just so Ed can get a reflection if he can. But anyways, BoJack Horseman is an animated series about a guy with a horse's head who is cynical, to say the least.
Yeah, I think that's a realistic...
Yeah, well, you know, this is the thing. The quality of entertainment, to me anyways, is becoming more and more characterized by fantasy and less by real-world scenarios. But here's the funny thing. I'm finding real life being characterized more and more by fantasy and less by real-world scenarios too. And I'm not sure whether it's Hollywood feeding society or society feeding Hollywood, but let's just say that the quality of intellect seems to be spiraling ever downward, ever lower.
Well, you know, look, and you know, and I'm not complaining because I think we're all part of the same, but the education that I received, I can they threw more stuff at me in grade school and high school than they have at my daughters, for instance. You know,
oh shit, eh?
I believe that, yeah. And there's the emphasis on mathematics is not there, and you know it should be. You should know a little bit about something.
Who?
It doesn't matter. Who cares? Who gives a shit?
That's true, eh? Okay, so let's take a look at our cannabis industry just for laughs. I saw some rather comical little headlines there, but some of them are not so comical. ChemSys International reported combined revenues of $7.5 million for Q4 and Q3, and a net loss for the year of $38 million.
38 million.
So they gang up 2 quarters to report 7.5 million. That's the third and fourth quarter's revenue. And then for the year, they lost 38 million or 50 cents a share.
What's the stock at?
I don't know.
Well, look, I'm just quickly looking at this balance sheet, okay? You got current assets, you got a little receivables, inventory, you got 5 million in current assets, you got non-current assets up to 28 million, including about 7 million in intangibles and other nothings.
And other nothings.
Goodwill and other nothings. And liabilities. It's, companies basically has no working capital.
Well, you can sell some weed, get some. Inner Spirit Holdings announced today that it's leading Canada's cannabis industry with 37 Spirit Leaf stores now open. We went. Oh no, you didn't come to Edmonton with us on that trip.
No,
we saw one in Edmonton. It was right near where George Robinson is producing that amazing. Did you see our video with the Orbital Gardens, RavenQuest Bio? RavenQuest, by the way, is a client, full disclosure, of our media production division. Did you see that?
No.
You didn't see the video, Ed. You don't watch the videos we produce in-house here. If you don't watch them, who's going to watch them?
No, well, I'm in-house. You have to be outhouse. You have to be in the outhouse.
In the outhouse. That's where you got your education?
In the outhouse.
You got taken to the outhouse? Ooh. That's spooky. Let's see, what other interesting news? MetaPharm Labs has submitted an application to list on NASDAQ. Now, I hope they've got some major market support lined up, because a little Canadian company going to NASDAQ without a major U.S. sponsor is like a lamb walking straight into the slaughter. Get out your forks and knives, people. Get ready to rumble.
The lamb is going into the den of the wolves.
Exactly.
Alpha
wolf.
Alpha wolf.
Yeah, Tilray signed a deal with Great North Distributors for Canadian distribution. Oh, sorry, Tinley. Not Tilray, Tinley. Tinley Beverage Company.
I know.
You know that, Jeff Steele. We've had him on the show, haven't we? Okay, here's another one. Isracan Biosciences. Want to bet that they're based in Israel? Isracan Biosciences. Where do you think they're based?
Israel.
Oh, you are so good. Anyways, yeah, so these guys have created injectable cannabinoids.
Is that like a hot beef injection?
A hot beef injection? Jeez, I don't even want to know what that means. Hot beef injection. Ooh, that's.
Well, you know how they have these little things, and you get a turkey and you're basting it, and then you take.
What are you doing to it?
It's like a needle, but it's not, and you inject cloves of garlic right into the bird.
No kidding.
you ever seen that?
That's a hot meat injection?
No, that's a hot garlic injection.
I thought you said it was a clove.
A clove?
Clove of garlic. Not a clove of cloves?
Oh, gee.
How many cloves? How many cloves?
In a bulb?
Yeah.
How many cloves in a bulb?
Well, how many cloves in a jar of cloves?
A jar full. Is that a jar? Is it a jar?
Is a door?
When
is a door a jar?
When it's open.
Oh boy, the quality of this programming.
I'll tell you though.
I'll tell you. No, I'll tell you, Ed.
Okay, you tell me.
Actually, you know who can tell us a thing or two about iron is Matt Simpson. I had this conversation with him just a short while ago. Black Iron CEO Matt Simpson joins me now. Matt, welcome.
Thank you for having me.
Matt, you have been building a iron ore project in Ukraine for quite some time, or developing rather, not necessarily building yet. And you're getting close to the point where you're going to start construction financing providing, and you've really got a great understanding of it. Tell me about the black iron deposit and what it all means for the company and its shareholders.
Sure. So with iron ore, what's most important is your proximity to major infrastructure and skilled labor. So in our case, we're only about 2 kilometers away from the government-owned railway. High voltage power lines follow that rail, and our connection point is only 30 kilometers from the site, and we can access 5 different ports between 230 and 430 kilometers away. So all the major infrastructure is really close to where the ore body is located. And as far as skilled labor, which is the other big component for a bulk commodity, there's a city of 750,000 people only 8 kilometers from our site, where a skilled tradesman makes a fraction of what they'd make here in Canada.
Sure. Now, the mining industry generally is very often driven by what precious metals are doing, but you were telling me earlier that iron ore is one of the best performing metallic commodities in the current cycle.
That's correct. It is up about 30% year to date. Was even higher earlier this year. But a lot of people don't realize that iron ore is actually the main building block for steel. And there's so many uses everyday life for steel, be it the car that you probably took to work, or whether it was the train or even a bike, through to utensils that you probably even had your meals with.
Mm-hmm. You bet. Okay, so then most people are going to look at this and say, wow, the Ukraine, isn't there political risk associated with that? And certainly that must be true to some degree, as it is with anywhere. But what is the reality in the Ukraine right now?
So Ukraine very much is a country in transition, and it's a lot better than most people might think. What I really like to refer to is the World Bank Ease of Doing Business Index. When I first started Black Iron back in 2011, Ukraine was ranked 156 out of 190 countries, which is pretty bad. Mm-hmm. This year, the World Bank ranks Ukraine as 64, ahead of pretty much every country in South America, pretty well every African country. So it's by no means, say, a country like Canada, where things are a lot more established and the rule of law is fully enforced. But it's really come a long way in a short period of time. And you're starting to see big investors come back into the country.
Mm-hmm. Fantastic. Okay, and so you've already got great interest in financing this. You know how much you need. Tell us about the actual timeline that would take to put this into production, given the ability to access all the capital you need.
Well, I think that's the really exciting thing for investors in this project, is that in a very short period of time, literally only about the next 6 months, there's going to be some massive announcements that will really unlock the value of this project. So we need about $436 million to construct our initial 4 million tons a year of production of the plant. If you split that between debt and equity, about 40% equity means about $175 million, and debt will be about $260 million. We currently have, in addition to Glencore, which is publicly announced, several other companies, mostly steel mills and trading houses, that are showing a strong interest in entering into a prepaid offtake agreement. So that'll provide the bulk of the equity. We also have 2 China-based construction companies that are very serious about funding about $50 million of the construction cost in equity in exchange for being awarded the construction contract. And on the debt side, we're currently receiving expressions of interest from mostly European banks and credit agencies that will easily provide the $260 million of debt that we need for the project. And all that's going to be announced in the next 6 months.
Sure. So tell me about the economics. How much cash does 4 million tons a year throw off given today's prices, and what is the range of price sensitivities in there where it becomes less attractive?
So today the iron ore price is sitting around $85 a ton. And when people say the price today is 85, they're really referring to iron with 62% content. In our case, this is an ultra premium 68% iron content product in the top 4% globally. So we'll receive somewhere between around $18 and $45 above the benchmark price. So today you would basically sell it for about $125 a ton, and you make it for $30. So the margins are phenomenal, today's prices. I don't believe those prices are here to stay. A lot of people do believe the price will soften down. We use $62 to be very conservative in our economic study. And then after making the adjustments for the iron content and the product quality, we should be able to receive long-term probably around $100 compared to, again, our $30 operating cost. But the beauty of this project, James, is that even if iron ore prices crash, you're still talking about a 20% after-tax return on investment. It's pretty rare you find a project with such strong economics. And it's because we're not building big infrastructure, and what we are building, we're using low-cost, local, highly skilled labor.
Sure. What was it that happened within the iron ore market over the last year to make it deliver 30% performance?
So what happened at the start of the year is that Vale, which is one of the world's largest iron ore producers, had a tailings dam failure. And that resulted in the Brazilian government shutting down a number of their operations, which caused the price initially to spike, almost double actually. You then had, coupled with that, in Australia, which is another huge iron ore producing country, a number of hurricanes that were wiping out some of the rail capacities and delaying port access. So that caused the iron ore price to shoot up quite a bit. It then pulled back a bit with some of the trade war comments between the US and China, but it's still, again, sitting at very, very healthy levels today.
So I guess iron ore demand is very much driven by steel production, which is obviously driven by global economic conditions generally. So if one was bullish, one would be bullish for iron ore. But you said that some people think that the price of iron ore could return to the pre-perfect storm price levels, but that could be easily offset if the global economic growth picture continues to improve.
Oh, certainly. And I think another thing that's important for people to be aware of is that not all iron ore is the same. So in our case, again, as I mentioned, it's a very high quality product. And what that means is you can also make steel for less emissions. So instead of heating up silica, which is kind of a waste product normally associated with your iron ore, the higher the iron content, the more you're actually just heating up the iron. So globally, you're seeing people become more and more conscious about being more environmentally friendly, trying to knock down greenhouse gas emissions, including in China, where the government's put on a lot of emission caps on their steel mills. So even when the global price might soften a little bit, the demand for this product won't soften as much because it allows you to still make that essential steel just in a more sustainable manner.
Sure. And I guess is the premium nature of your iron ore slurry going to be more in demand globally than, say, something of lesser quality?
Oh, certainly. I mean, there's been a structural shift. This is at least how companies like CRU or Wood Mackenzie that do a lot of market forecasting describe it. Where about 2 years ago, in light of a lot of these policy changes in China, it did actually cause the grade premium or penalty, so it's always relative to 62%, to double to triple. And people believe that that number will get compressed or expand depending on what the steel price is, but by and large, it's not going to go back to historic levels. It'll always be elevated.
Sure. How much money has gone into black iron so far since the beginning?
Since inception, about 80 million US has gone into developing this project.
Right. So this is a valuable asset already.
It very much is. I mean, the backstory of the company is we initially listed in 2011, and by 2014, in addition to doing all your traditional de-risking work like feasibility studies and pilot plant testing, probably more interestingly, we actually secured $511 million from Metinvest, which is the largest iron ore company in Ukraine, about 9th largest in the world, to construct what was then a much larger 10 million ton a year plant. In addition to that, we were just about to ink a $280 million offtake agreement. So back in 2014, this was on the brink of being constructed, and that's why you saw such a large investment. Unfortunately, when Russia invaded eastern Ukraine, it caused us to put the brakes on the project for a number of years. But we're back now after 5.5 years of stability in the conflict zone in Ukraine. And you're seeing, again, other major investors, our next door neighbor, ArcelorMittal, for example, putting $1.8 billion into their iron ore mine. A lot of people are starting to come back to Ukraine. Iron ore prices are up, support of government. It really feels like this is the right time to get this project back up going again.
Sounds great, Matt. Well, that's a great update. Really appreciate you coming in today. Thanks for joining me today.
Thank you for having me.
You know, right now in the TSX Venture, the top 10 companies trading by volume
Less than 2 million.
Are not cannabis. There's not a cannabis company among them.
You got to be kidding me.
I shit you not, Edward. The era of the cannabis behemoth is, for now, over. Not to say that it couldn't return with a vengeance upon certain sort of market catalysts unfolding. Like, imagine, say, Donald Trump legalizes cannabis by executive order. At the same time, Pfizer buys and consolidates, say, 3 large cannabis companies. Do you think that would reverse the whole trend? Or would that just be another selling event for all the companies? I see you are just so adamant with an opinion there that I'll just defer to my, we'll just go straight to most active. How about that?
What if you put up a plastic replica of me up here and I just look at you?
And I put my hand like...
It is. What do you think?
And I go, Jesus. The top 10
watch where you put your hand.
The top 10 companies trading on the TSX Venture by volume at this hour.
What's the top one?
Garibaldi Resources.
How much?
$1.11.
Volume.
711,000.
That's it?
That's all.
That's it?
That's the high trader for the day.
That's the...
No, you're not allowed to look at this window, I'm afraid. This is my special window.
You feel a little
This
left
is
out?
down 39 cents, down 26% on the day. We'll go take a look at Garibaldi Resources and figure out what happened in their news releases to see what happened. K92 Mining, down 7 cents to $2.15 on 630,000 shares traded. High Gold Mining, $1.83, up 33 cents on 793,000 shares. High Gold Mining, let's see what happened to them. Did they put out a press release? Oh, that's funny. They retracted and clarified their earlier press release. This is quite funny. So at 7 o'clock this morning, High Gold puts out a press release saying that we have drilled 178 meters, grading 19.5 grams per ton gold equivalent. 20 grams per ton over 107 meters gold equivalent.
What'd the stock do?
Well, the stock took off. It absolutely rocked.
No, what's the ticker?
Then it was halted.
What's the ticker?
The ticker is HIGH. Now, this is funny. That would be a great ticker for a cannabis company.
Yeah.
And you would think, so then they came out with a press release. They have retracted their press release in part. Okay, so wait a sec. No, they're not retracting the drill result. They're retracting the table of comparisons against a twinned historical drill hole. Interesting.
Okay, so those results then, so this stock was is this the one?
This is the one.
That we were talking about?
Nope.
A little while ago, we were saying it came out, and they were talking about it. James Doe was talking about it.
Really?
I think this is the one. I think it is.
Things are so bad in the cannabis space. We're talking about mining. Nobody wants to come on. No cannabis company CEO is taking interviews at this point, and so we're talking about mining. You know, it's the writing on the wall here for the cannabis industry. Remember, we'll be saying in 10 years, Ed, when we're in our wheelchairs, we'll be like, remember there was that cannabis bubble back in 2019 and the stocks went to $70 before they came crashing back to nothing and we had to go out and wash dishes because our entire positions had blown us up financially. Oh, remember those days, Eddie? Pass the bottle of scotch now, will you, fucker?
Yeah.
Anyways, that's...
No, you keep talking, I'll do the drinking.
That's what we have to look forward to.
Oh, my God.
So the top 10 traders of TSX Venture are all mining companies. Well, except for Ready Shred, which is...
And
Zebec.
Zebec.
Oh, Zebec, yes.
Yeah.
Zebec Absorption.
So now there's 3 at a time.
So that thing's 204. That thing was 70 cents when we were first talking about it on this show.
It was a dime when I was introduced to it, 10 cents.
Well, but you didn't tell anybody.
Yes, I did.
You didn't tell me.
Well, didn't know you then.
You told me when it was 70, and then you told me the story how you first discovered it when you were at 10. I was like, guy's putting me together for his exit strategy, trying to promote me at 70, and he's in at 10. I didn't know you that well,
who
man.
apparently is into this in a big way is one of the big fund managers that does small caps here in town.
Oh boy, that narrows it. Oh, actually, there are only about 3 left.
Can I say?
Steve Palmer,
Yeah.
Jerry Brocklesby.
Yeah.
Who else is there?
Well, the guy, his name was associated with a fund in the past. I think his dad, one of the AGF big funds.
Boy, you're really making this cryptic, aren't you?
I'm just going to leave it alone. I'm going to leave it alone.
Yeah. Anyways, number 11 is Valens Grow Works. At least we're showing in number 11.
Top 11.
Number 11.
I think the top 10 is overrated. I think you really want that the second 10 from 11 to 20.
Why?
Because
All right, let's take a look at the TSX now.
TSX Venture?
Encana Corp, the traitorous sons of bitches who are moving to the United States. And apparently in a globalized world, there's no such thing as patriotism, economic or national or any.
Yeah.
But for me, there still is. So those traitors, bastards at Encana Corp, who have decided to move to the United States with their tail between their skinny little hairless legs, they are up 47 cents today on 24 million shares traded to 633. Now, do you think that's because the price of natural gas has increased by 20% in the last 2 weeks, or do you think it's because they're moving to the United States?
I think it's because probably a little bit of both.
Oh, really? That's what... geez, what are you, a journalist? That's an unqualified answer.
What are you, a politician?
Yeah, exactly. No, but the stock's been on a run since they announced that they're moving to the United States. In fact, when they made that announcement, the stock was at like 520.
Now it's at $6.
Now it's at 640.
Okay, so think about it. They're doing something for the shareholder.
Well,
Yeah.
I don't think they're doing it for the shareholder.
Well, they want the stock
Anyway,
up.
so Bombardier, Canada's favorite, what do you call that? Corporate welfare security case.
Okay.
Bombardier is $1.92. Did you notice all the streetcars in Toronto are now those big, long, beautiful ones that...
Bombardier?
Yeah, Bombardier.
Really? They make those?
Where?
They should make one that's so long that it goes all the way from Montreal to Toronto. And you just get on it and walk over.
The train doesn't actually have to move.
No, it doesn't have to move.
That would be a long train.
And get in the bar car.
Well, but then you'd be stuck in the bar car. You'd never make it to Toronto or Montreal.
Well, certainly I think you would.
Anyways,
Okay.
we have another guest here today.
Or better yet, have a slide all the way. A slide.
Oh,
A slide. You put a slide in the vehicle, you get on the slide, and you slide all the way into Toronto from Montreal. How do you get back,
Montreal's
though? How do you
downhill.
get back?
Montreal's downhill from
You
here.
get two slides. You get one going one way and one going the other.
That gravity would not permit that.
No, but two separate slides.
One for French people, one for English.
One's up. You have to climb up in Montreal, slide here, and you get here, and you get to climb up the other one and slide back. You could do this everywhere.
Just put slides in.
Instead of going for a flight, you go for a slide.
Huh? That's just sort of genius, Edward. Why don't you put together a little pubco, a little shell, and we'll fund it, and we'll take it public.
Wouldn't that be something?
It would be something, all right.
Holy
I don't know what it would be, but it would be something.
Oh, Jesus.
What other big news today? Bank of America decided to hike its minimum wage for all employees to $20 per hour, a year ahead of schedule.
What?
Oh, isn't that nice?
Bank America?
Bank of America.
$20 minimum?
$20 minimum.
So they don't go by minimum wage.
That's their minimum wage. $20. $20 an hour.
The government's minimum wage.
No, the Bank of America.
Why do they have a minimum wage?
Well, because it's the law.
Every company has to have a minimum wage?
No, there's a minimum wage that is the law, and then there is the minimum wage that a company deigns to pay its lowest paid employees. And in the case of Bank America,
They decided $20
an hour.
Canadian?
Bank of America. No, not Canadian. Bank of Bitcoin. Bank of America is now paying them $20 an hour, a year ahead of schedule. So they made this announcement.
That's like about 28 Canadian.
Yeah, I know. That's a minimum
you know
wage.
what? Send in my app. Sit in my...
Ed, you're going to need a green card. Sorry to tell you.
I'll get some green paint and...
I don't think that's quite what they mean by green card.
Okay.
And Amazon, apparently, is responsible for more big tech job growth since 2000 than any other company.
Yeah, I read that. That's pretty amazing.
Actually,
That's pretty
Facebook,
amazing.
Alphabet, Microsoft, Apple, and Amazon have collectively put more than 1 million people to work between 2000 and 2018. Here's my question. How many have they put out of work? Like, they don't tell you about how many they fired.
I know.
And it's like, well, okay, so is that number more like 10 million? Because typically, isn't a company like the size of that always high grading their staff? And it's like, as soon as a better one comes along, the next best one gets the boot? Isn't that the way large corporations work these days?
Me no no.
Me no no?
Me no no.
No 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 no. Por qué no no no? We're shy on material today, and that clock is going slower than ever.
No, it's not.
This is the cannabis industry.
Look how fast it's going. Look, it's hardly moving.
It's bolting. Anyways.
Okay. So let's just. I want to point out.
Let's take a look at the cannabis charts before we go any further, Mister.
Okay.
Like let's just try to maintain the program. Let's pretend that the cannabis industry is not over. Oh, yes, tomorrow on the show, I have a guest, and we have a conversation that will not go like any other guest conversation has ever gone before. And the company's called Orthogonal Thinking. Do you know what orthogonal thinking is?
Orthogonal.
Yeah.
That would probably be some kind of type of thinking. Orthogonal.
Well, that's a good, since it comes before the word thinking, that's a good bet.
So
Descriptor.
it's a type of thinking or
Orthogonal thinking.
Okay.
Do you know what that is?
Yeah, it's a type of thinking.
And what does it mean? What does it do?
Well, there's different types of thinking, and that happens to be one of them.
Well, what's an orthogon?
Orthogon.
In mathematics, orthogonality is the generalization of the notion of perpendicularity to the linear algebra of bilinear forms.
There you go.
Two elements, u and v, of a vector space with bilinear form b are orthogonal when b equals 0. Depending on the bilinear form, the vector space may contain non-zero self-orthogonal vectors. Now let me ask you again. What is orthogonal thinking? See? That didn't help, did it?
It's based on perpendicular approach to different things.
Asymmetrical thinking, three-dimensional thinking, multi-dimensional thinking, I don't know. Who knows about this stuff? Anyways, my guest tomorrow is a gentleman who is David Nixad is here.
Really?
Yes. And we're going to trip tomorrow on the show. We're going to be tripping.
Yeah.
Do you know what that means?
Yeah.
Orthogonal thinking.
Okay. I'm gonna learn what orthogonal thinking is tonight, and I'm gonna do some more orthogonal thinking, and I'm gonna come on the show tomorrow, and I want you to tell me if
I want you to out orthogonal think me. You'll thank me if you out orthogonal think me tomorrow with our orthogonal information tonight. Anyways, looking at the cannabis industry, try not to start bawling your eyes out because the stocks are actually generally up today, led by the large caps. Large cap index is up 2.35%. No, it's not. Is it? Oh, Jesus.
Okay, let's look at the S&P before the market ends.
No, I don't think so.
I want to know if it's up or down.
Okay. There's the, oops, that's not what I'm looking for. Here, let's go look at the index page here and see what's driving the large caps here they are, led by MetaPharm Labs on the news that it's applying for its NASDAQ listing. MetaPharms is up 7.9% to $4.89 or 36 cents on the day. Cresco Labs is up 6.67%. And followed by Village Farms, which is up 5.4% to 11.25. What do you think of that?
That's interesting.
Yeah. Do you want to talk about it? You want to elaborate on that a little bit more, Ed?
Well, you kind of like talking about certain things, and I do too.
Okay, tell me about your favorite...
Favorite chocolate bar?
No, sport.
Favorite sport?
Sport.
I don't know. I probably, you know what it is? It's Australian rules football.
Really?
Yeah.
Do you play?
No.
Have you ever played?
No.
Do you know how the game goes?
No. But I know. But there's a guy with a white coat, and every
How is
time
that your favorite
you
sport?
score, he stands out like this, and he goes
Really?
Yeah.
He's wearing a white coat.
a white, like almost like a doctor's coat.
That happens anywhere else. It means you're off to the loony bin.
I know.
Huh.
You got to watch this Australian rules football. It's
Okay.
unbelievable.
Well,
And
we'll
the other
check it
thing
out.
is hurling. I like hurling.
Hurling. Like as in...
I like hurling.
Hurling.
No problem with the hurling.
Chundering. Chanunda, that's a chunda.
Oh.
Chunda! Anyways, that's our rather uninteresting show today, but tomorrow we're going to be on magic mushrooms, so it's going to be way better, and we'll be tripping.
Okay.
So we'll see you then.
Chemesis.
Don't subscribe, whatever you do.